Burgess and Bolton's weekly wrap-up.
Hello, Ben.
Hello, Jeremy. Happy Friday.
Same to you. And welcome, everybody, to this week's edition of Burgess and Bolton's weekly wrap-up, where we look at everything to do with the London market, technology, change, innovation. And this week, we're going to preview a bunch of events that are coming up. But first, as always, let's start with the news. So we've just seen a nice bit of news, Ben, around Lemonade, our favourite company. Love them or hate them. Lemonade sets new record by setting claim in 2 seconds. Wow. There you go.
Wow.
In the article, which isn't very long, the chatbot named AI Jim got the claim, checked the policy, did some fraud stuff, and then approved the claim and then settled it in 2 seconds. And Daniel Schreiber. Yeah, we got it. This is what 21st century insurance feels like. There we are. It doesn't say in the article what the claim was for and how much it was for. I guess it wasn't an oil rig.
Well, the last one that was 4 seconds was a fur coat.
Ah.
So I don't know. Yeah, my experience with Lemonade was great. The claims, I could have asked for nothing more than I could have hoped for. Interesting.
Thanks again for supporting that. So yeah, it's interesting, isn't it, that they're using
a lot happened in that 2 seconds, didn't it?
It did
for that customer.
Yeah. There's a couple of things in there. It's like, does it really matter if it takes 2 minutes or 2 seconds? Or
it's a gimmick, mate.
It is a bit, isn't it? But I think the interesting thing for me is the use of AI technology and just we talked about this on the show, lots of times, but the way that is developing and the speed at which it's developing is incredible. We're going to come on to TINtech.
And that's just how much people are talking about it.
It is. But we're going to come on to some of the events taking place next week. But I was talking to someone about this topic last week. And they were basically saying, if you look at all the reports pre-last year about what were the timelines for the development of AI, when will it be coming into use in business and all this kind of thing, they got it wildly wrong. It's way ahead of where they're predicting. So that poses a number of challenges for organizations, because it is, there is no doubt that this technology will impact society and by definition, insurance. And I think it's as we always say, it's how you're going to bring the human element and the technology, AI, whatever it is, together to make the sum of the parts bigger than it is. And I think it has, some real use cases in the London market. I've seen examples of this technology being used in underwriting in order to pull data together that was being done manually. And, it's impressive stuff. And, if you start off small, you can start to see how it can impact it. So, yeah, I think it's interesting. It's a gimmick, yes, but I think the thing just on the other side of all of that is there's an article in the Insider this week, which is the second of two, I think, and it's talking about where particularly IT and regulatory people are worried about it, and one of the main concerns is about security in an open platform, and that's not surprising. But the other is more around the actual way in which GPT works by taking in personal information and then regurgitating it, and the potential for errors there. Again, so that's something to come, I think. Although there was a story this week about a piece of AI that had told 500 people that they'd got cancer
and they had to take that back, which they said wasn't necessarily the fault of the AI, but still it's part of this whole scene, isn't it? Of, I'm not kind of doom and gloom about it, but I do think that there is this theme developing, which is that the risk as it becomes more embedded or used, that there are some big mistakes that could be made in the data increase proportionally, and that's potentially a big problem. But it is, I mean, how many things have we had on this show that have been, flavour of the month as well? We ought to be careful, oughtn't we? Because we talked about electric cars for quite a while, and then that's not even on the scene now, is it? I don't even bother with those electric car articles anymore.
No,
self-driving, autonomous, not electric vehicles, self-driving, all that.
Yeah. It's very interesting. So I think it's this convergence, I suppose, of the technologies that is interesting. I think to your point as well, when you're using this technology to make decisions, it's going to be important that you understand how the algorithms are working, because you're going to have to prove that to the regulators. But
I think so. And we've made some points before as well about who owns this technology and who makes hay out of it in terms of money. So I think that's another point as well. There are lots of issues around it, I think, and there's lots of potential positives. But it's because everybody's doing it, man.
Everybody is doing it. You're right. Great. Well, we will, as ever, have an AI flavored theme for at least the next 2 weeks. That's for sure. So let's move on. So we've got stats of the week. We haven't done this for a while, but this is one from you. You talk about that while I find the jingle.
Yeah, where's that jingle, man? Jeez.
Yeah, it's good.
Anyway, so this is, as it says in the article, an FT article about anatomy of an AIG payday, and it refers to Peter Zaffarino, who is the chief executive of AIG. AIG has just said they will pay him what is called a special grant of stock units, equivalent to $50 million this year, and he's already paid 20 million. So on top of his 20 million, they paid him 50 million. And, so the first point is that, but that's the first point. The second point is that this has been voted down by the proxy shareholders, and the lot of numbers in here. Got to keep up. The numbers are for his pay rise, 199 million, and against 416 million. So pretty emphatically against this going through, but it's only advisory. Apparently, shareholders' votes are only advisory, which I think I knew, but it still makes me raise an eyebrow. And especially when you're talking about this sum of money, and there could and probably will go ahead with this. So in response to this vote, AIG said that Zaffarino's deserved this because he's of exemplary leadership, unique financial, technical, and operational capabilities, and his track record of delivering outperforming results. So that's the statement from AIG, and so FT then goes on to do two things. One is to look at the performance of AIG, which I think we all know is not great over the years. Yeah. So there's been two things really. One is that AIG was worth 230 billion back in about whenever it was 2008 or 10 or something, and now it's only worth 40 billion. And if you look at the chart, it's pretty much languished. So I don't think, objectively, I don't think that AIG could claim that any of its chief executives, whether it's Zaffarino or any of the others, have really turned this company around. And the other is that there is a process, as you probably know, of how you benchmark chief execs' pay. And the FT really concludes that process is, when you look at the peer group, AIG is just a kind of minnow, really, against these companies.
Can't just see it there, but it's in the centre of the.
Yeah, it's actually against the banks and who AIG measures itself apparently on this remuneration calculation. So anyway, so the FT rather tongue-in-cheek concludes that Zaffarino indeed must have unique financial capabilities if off the back of that he can convince AIG to pay him 50 million to stay on and keep doing the job. And then at the end of the article, they have also made their own claim, the Alphaville people, to say on the same basis, I think, it's the next time the FT does a pay review, Alphaville reporters plan to compare themselves with Taylor Swift. After all, we're similar size, most of us are taller, and they're also entertainers who have mastered the English language. So the story will run and run. So there's a bit of there's a bit of fun, there's a bit of serious stuff about whether AIG's really had a turnaround at all, which I don't think it has, interestingly, and despite a string of chief execs and restructuring and everything else. And part of me says this is now something where the business is under some scrutiny, I suppose. It's having the light shone on it a little bit as well. So let's see what happens in all of this. But it's if I was working there, what would I think about that?
Yeah, I think it was a lot of money. That's what I think. An eye-watering amount of money.
Well, it just seems. Yeah. I mean, if I was working then, or you ran a business and the share price hadn't gone up, and then 50 million's paid out, what would you be thinking?
This is madness. Yeah, your shareholder.
That was the word madness. I was looking for. Madness.
Yeah. Absolute madness. But it's summertime, so it's trying anything on. It's an amazing story. Thanks for that, Ben.
It's a phenomenal amount of money.
It is
for a year.
For a year. Incredible. I found it.
Oh.
Hey Ben, what's the word on the data stream?
That's
okay. So for next week, that's got to go at the beginning because it doesn't really work at the end.
No, you're right. Anyway, we try these things, don't we?
It loses the tension, the creative tension we were trying to achieve with that.
Oh well, and it had a police siren in. The guy could have been arrested for lying. But anyway. Right, let's move on. Right, Californian rates. This is an interesting story, Ben.
Yeah, it's a little angle on the story that's been running around insurers pulling coverage in California over wildfires and costs of claims, basically. The article really focuses saying that there isn't this isn't a climate story, although it may be in part, but it's mainly a story about how the US federal regulators restrict and cap the insurance rates that can be charged in terms of in order to protect consumers or customers. But actually this is causing a problem because as I say, building costs and various supposed effects of climate change such as wildfires and so on are becoming unpredictable. Costs of claims are rising clearly, and they can't push the rates up anymore. So it's an interesting angle, I think, and I do think that it has some sense to it and some merit, which is that if this is happening, you kind of have to raise the rates, otherwise insurers can't make any money on this, and that's the system, right?
Yeah, that's just business, isn't it? So
yeah. I mean, I think you can have arguments about there's a whole argument at the moment about car insurance, which has gone up something like 17-18% in the US and is driving inflation quite strongly because everybody's got a car, right?
Yeah.
And but you see, so there are arguments there that insurers might be profiteering, so-called, out of it. But then they say, well, the cost of parts and the claims has gone up, etc., by a third. So it is it is this debate in a world economy that is under pressure, basically. But I think insurers sometimes, as in this California thing, I think it's got to be, the political element has got to be taken out of this somehow, because otherwise people just can't get coverage. So California at the moment is pretty much uninsurable. And there was an article, I think I saw it in the FT or Bloomberg this week, which was saying the same thing. What if America becomes uninsurable? New York has just had this smog alert, and if you can't, and it's a big issue for insurers, because how do they, I think we know the insurers very well, and they want to cover these things and they want to be able to, but if they're restricted, then it's kind of crazy.
Yeah, regulation getting in the way there. Interesting. Do you think that some of that will come to London then, Ben, or is there a way around?
No, I don't think so. And we ought to get other people on here to comment. But I think it's a different system. I mean, the federal system is a very highly regulated here, but it's highly regulated in the US with rate caps, set by state regulators to protect consumers. I mean, there are regulations here around that as well, but they're kind of they're nationwide, so they're not the same, and they don't. And it's why there is a big, surplus lines market in the US, because stuff comes out of the US if it's not written. So we should get someone on to talk about the history of all that, because I think it is really interesting. And the E&S and the program market is getting very big at the moment. But the question about your question is a good one: is do those risks that don't get written in California that may then come out and get written in London, for example, do they cause problems down the line? In terms of claims. And I was talking actually to someone about that last night, and I don't think that was a claims person. I don't think they knew the answer necessarily to that.
Interesting. Yeah, let's see if we can get someone on to shed a bit more light onto that, and how it might develop. Very good. Okay, let's move on. So we've got a couple of events. We've got a lot of events coming up. It's AirMech next week.
Non-stop.
It's non-stop events. We've got TINtech. I just wanted to talk a bit about the pre-event survey. So TINtech event, technology conference for the insurance sector, kind of looking at the way that technology is driving change in the industry and how individual firms are using tech to find new ways of working and deliver efficiencies and meet customer expectations. And part of that, we run a benchmarking survey to discover the main issues and challenges that the audience are dealing with. So I've run that survey, and I just thought I would share with you sort of the highlights from it. It's a pretty weighty document. I think it's 10 or 11 pages. So I've just kind of pulled it into 5, hopefully bite-size little takeouts there. So these are the key kind of challenges that come out of the survey. So legacy transformation and agility. This is one that's been around for a long time. And the reason I think it's still there is because the nature of the technology has changed. So you now got more options in terms of what you can do in terms of transforming your legacy. And you no longer need these huge 3 to 5 year programs where you're trying to replace everything with one system. You can do it in bite-sized pieces, as we were talking about before. So that's really interesting how you tackle kind of that legacy challenge. And also, it isn't just kind of legacy technology. It's the way people work, isn't it? We always talk about it's how technology enables you to do your job better or quicker or whatever it is. So it's not just about changing tech. It's about changing the way that you work and how your employees, I guess, operate on that type of level. We've already talked about automation and efficiency, and I think there are just more and more use cases coming up. And then you can bring in the kind of the third one, which is AI, and how that is going to firstly impact society and risks and that type of thing, but also then how you're going to use it within your organization, especially generative AI. You can imagine in the SME commercial space, that would be extremely powerful and useful. Build and buy, again, as organizations become more reliant on technology, it's like, who owns, like you were saying before, who owns this technology? where, who's making it? Should you be investing yourself? Should be partnering? How do you do that? It's interesting because there's a lot of money on the line, and if you get it wrong, you can be in a lot of trouble. So, and then end-to-end customer service, a little bit more on the GI side, retail side, but the self-service question has been around for a long time. I think we tend to look at banks and how we interact with those brands, through their apps on a much more regular basis, and how can we, I guess, look towards our friends in the banking sector and learn some lessons and perhaps drive up the customer service side of things as well. So I just thought I'd share those. They're interesting points. They're not revolutionary, but I think it's interesting that the nuances and what's driving change is changing, I suppose.
Yeah, I mean, obviously it's a technology conference. I think your point about the people is important. I mean, I've just moved house, so what what you have to do, obviously, is a lot of administration and bureaucracy to try and change addresses and all sorts, and it's quite frankly a bit of a nightmare. But you do go through this very much immersed in this digital stroke human experience, and I have to say that I think the digital is largely terrible, and the human, because it's not really been developed in alignment with that technology, is also not particularly good, although it can get you off the hook. But all it's doing is getting you sorting out what didn't go right with the technology, with the digitization bit of it. And the lack of integration, if you like, of humans and that technology. So really, ideally, I think you need to have the technology working and then a button you press where the person comes on and says, can I help you? Now, that could be a chatbot, or it could be a live chat, or a real human on a phone, but it doesn't really matter. I think all of this stuff needs that quick, right, I'm off the path, it's not working, could you please sort me out? But also, I think what I've observed is there are huge systemic problems which could be partly legacy. I know legacy in insurance is about the data and not being able to grab it out of the system, but I think it's that however this was set up, it doesn't work. So there are lots of areas where there are major, to me, just gaps. I've got one with sorry, I won't bore on about my move, but there's one with a cable company at the moment. So it disconnects me at my old house, and it reconnects me, and the engineer's been and it's put in the new router and everything, and I'm paying for it. But on its app, where I've got all my accounts and everything else, it says you're disconnected, you no longer have this account, and you can't go on it. And they've told me that takes 60 days. So all the human bit of it has worked. The engineer's been fixed it up, it's actually working, and I'm paying for it. But this digital bit is taking 60 days, which is just ridiculous. I mean, it's actually getting in the way. I can't order anything from them, so it's harming their business. I can't check my bills. I can't do anything without calling them up. And then every time I call them, of course, they go, well, I can't understand why that's happened. And then they go, oh yes, well, it takes 60 days to get your email registered on the new system.
Yeah.
Now, it's just one example. I could give you others, and everybody else could give others, but it's an example of, we've got to be very careful about the world we walk into. And we're just about to put out a report on e-trading, which we'll talk about next week. But every single page in that report says we need to have a human balance. And I've compared it really to the old, to any manufacturing business, cars or whatever, with a conveyor belt, going back that far, there's a human being doing the quality checks.
Yeah.
And we need something like that. I think the problem with financial services in general, and a lot of services like, that are abstract, not this kind of, there's a widget on a conveyor belt. I think they just go, look, let's just go full automation and get rid of people.
Yeah.
And I think, that's where the problem lies, really.
Yeah. Have you not paid your electric bill? Your lights have just gone out. Oh no, you're back.
It's because I've got a very complicated lighting system in this new setup, and it needs a bit of work on the automation front.
A bit of encouragement.
Yeah, I've got to keep pressing a button Anyway, there you go. Next week, I'm going to have some more lighting.
Good. Excellent. I think just going back to the kind of the human, the digital, I've just gone through a painful remortgage, not painful in the sense that I had to deal with a company, but painful that it's gone up so much. But so I use the online Habito, I think it's called, mortgage broker people, and that's excellent. Right? You're dealing with a person, and they help you through a digital journey. So you've got that beautiful mix of having somebody there in live chat, and they called me yesterday as well. So you feel like you're being supported through it. You're not being asked to supply documents that you've already supplied, all that stuff, So I think they've really nailed it. So, and I guess the broker that I was speaking to had a number of people on the live chat and was trying to do, juggle a number of conversations, all at once. So it's interesting how that's going to develop. So
I think some of it's getting there. I think for very basic things, it's quite good. My bank changed my address quickly and things like that, which is quite, was good because that can be a bit of a pain. But it's the myriad different ways in which you've got to. There's no standard or consistency around any of it, and therefore each time you do these things, you have to kind of learn them. And there's no hand holding or help, obviously, in these digital environments. So you just go, well, am I doing the right thing? I'm not really sure, And I don't think that's just because I'm old. I think it's just is different and complicated. And it's anyway, it's all over for me now, and the house moved sense for a while, so that's good.
Excellent. Good stuff. So so that's TINtech next week. We'll be talking about that and other things, data, AI, all that good stuff.
What's going on at AirMic? AirMic's going to be good, isn't it? I think you're doing a thing there.
I am, yeah. So I was talking to Julia at AirMic, and they've got an excellent conference. I've had a look at the agenda. I can't go because it obviously clashes with ours, but I'm there on the Wednesday, chairing a panel on tech, and we've got some interesting people from the insurtech world, some startup companies that are doing some interesting stuff. So I'm going to be asking them, where they're investing, what is the future. So that would be a good session.
That'd be interesting.
And then you have an event, Ben, which we did last year, which is the London's leading underwriters.
Yeah, we've got an event. It's on at the. We'll do more of it next week, and it'll be out on LinkedIn everywhere. It's our report that's turned into an event where we have a live event at the Whitechapel Gallery in London on the 27th of June.
Well, there I am.
Who's that bloke?
Don't know.
Look, so that's you. Yes, that's you emceeing. You're going to be emceeing again this year.
Yeah.
We couldn't find anybody else, and so it's going to be fun. That's the Beasley team, I believe. Rachel Turk, who did well last year. So subsequent to the event and things, there'll be a lot more publicity this year. The report's going to look very cool because it's been upgraded. And so we've got lots of stuff happening around that. So that's just a week and a half. Yeah.
Yeah. 27th, I think, from memory.
Yes, 27th of June, and it's 4 till 8. If you want to sign up via the InsureIndex website.
Great. Excellent. So I think that's everything, isn't it? That we've solved everything, so that's good.
We've covered everything, I think. Just about. I mean, there is a lot of news at the moment. I think it's all happening.
There's plenty of news. But with our events and everything else, we can't cover the whole world.
No, we can't cover the whole world. I think, though, the themes are pretty, compared with 2 years ago, I'd reflect. We should do a reflection show in a while, but I think, and get some interesting guests on. But I think that at the moment, it feels like they were really big themes, doesn't it, really? It's... global economy is the biggest, probably, at the moment, for me.
I would say that actually the the macro events, I would put it, that we've had to deal with over the past let's call it 5 years, of stuff that is just not in your control and you're just buffeted about is very wearing, and tiring, and it's quite difficult, I think, for executives, to constantly be almost firefighting in a sense. Whether you look at COVID or you look at IT or whatever it is, there just seems to be so much pressure around, and the economy, as you said. So,
but it goes back to that. I mean, we're in an industry that thinks it can predict, what will happen with financial performance and takes a bet on it. But as has been said by others, that you cannot predict the future, and I think that is really true at the moment. So you couldn't call a lot of this at the moment. It's very, very, very difficult. I think, therefore, what are people doing? I think technology is obviously one of those things. I think the people issue is clearly, we haven't even touched on that today, talent and how that's going to happen and work out in the future. So it feels a bit like everybody's muddling along with some very big things that could swipe them and swipe any plans any moment, really. So it is as they say, living in interesting times, which doesn't mean they're interesting, good, interesting. It could mean they're interesting, bad, interesting.
Yeah, indeed. Very good. Right. What are you doing this weekend? Anything good?
Yeah, I've got a new house, new barbecue, great weather, barbecuing.
Brilliant. Sounds like fun. I'll be clipping badges into plastic things, ready for Tuesday.
I thought you said clipping badgers. That's illegal.
Yeah, stop them flying away. Those mad flying badgers.
Leave them alone, those badgers. They've had enough. Clipping badgers. Okay, yeah. Careful how you say that.
Yeah, there we go. Now I'll be doing something or other. It's going to be a nice weekend. So, the cricket's on as well, isn't it?
Oh, the cricket's starting. That'll be exciting. Yes.
Yeah. So keep an eye on that as well. Great. Thanks everyone for tuning in. We'll be back next week. We'll have a post TINtech match analysis, I'm sure, and a bit more of a preview to the stuff that's coming up in the summer. But for now, thanks everyone. See you next week.
Have a great weekend. Bye.